Good morning and thanks for tuning into the trade setup. I'm Neeraj Shah. The cues aren't as optimistic or as positive as were yesterday, but if you got the tailwind of the market momentum behind, can it propel the markets higher is the question. For now, it may not necessarily look like that. A quick check on the global news flow per se. So Shanghai has taken the biggest steps towards reopening in about 2 months. I think this is probably one of the things that is leading to the slight tailwind that the global equity markets had yesterday as well. Um, the pickle might be that what's happening to oil now. EU leaders are pursuing a partial ban on Russian oil very diligently. This has led to crude being almost at 2 month highs at about 120, northwards of 120, 122, 123, Brent at about 118. So that is a bit of a pickle, if you will, because no matter what the tailwinds for markets might be, crude at 120 to 123 does pose a bit of a challenge. So keep that at the back of your mind. Eurozone's flash estimates for May inflation are scheduled to be released today, and that could have a bit of a bearing on how the European markets do today. And of course, Joe Biden is going to meet Jerome Powell. It's apparently a very rare meeting at the Oval Office for talks on economy and inflation. And I reckon that whatever sound bites come out of that meeting will have a bearing on what the US markets do. So keep this at the back of your mind as well, whether it happens today, tomorrow, or whatever. But yeah, I'm guessing sound bites around that could have a major bearing on what the US markets do. The Sgx Nifty and the Dow Futures are both pointing towards a downtick in the session today. So we have a start at about 2025. Okay, 50 points now in the red for the Sgx Nifty. And I think the Dow Futures are also pointing towards something similar. Now, this, of course, belies what happened in trade yesterday and a fairly strong day. Third straight day of gains, fourth straight day of positive market breadth, and you could see what happened, right? We were talking about Gujarat Ambuja Exports and the fabulous results yesterday, or 3M and Fine Organics and the strong results yesterday. So some of these stocks actually went up with reason on very strong numbers. There's just a bit of momentum that we had for a bunch of names in trade yesterday, which is why 414 advances to about 85 declines. So keep that in mind that the last 2 or 3 sessions we were a bit of a tailwind, and I think the momentum is on the positive side. Let's see if it lasts. FIs bought a small, minute number yesterday, but that could have been on account of various reasons. So not reading too much into it. So what's the trade setup for the day? I think yesterday the up move led to a gap area being filled. That's 16,500 to 370, and that's the gap area. Now that will be seen as an immediate support for the index. But when I looked at some monthly reports which write about what the month or the series could look like, the 17,000 call on the higher side is a key hurdle. Because the OI out there is the highest at over 75 lakh shares, and therefore that becomes a bit of a hurdle area for the index, presuming that the index goes up till there in the first place. But if it does, then 17,000 from a monthly basis is probably an area which is worth focusing on. And the tech short squeeze could see the sector remaining in focus today. We had that sector in focus yesterday. Almost everything in technology did well. Don't think the shorts are completely out of the system as yet. And therefore, probably that one sector that remains in focus is technology, simply because it's had a bit of a bloodbath of sorts and maybe kind of resuming a bit of an uptrend or getting back to a little bit of a normalcy as well. So that could be interesting. Now, in light of all of this, what are the stocks that people should keep a keen eye out for? First, it's Jindal Steel and Power. Now, we know what's happening with some of the metal companies' results, right? We've seen what's happened to the EBITDA numbers for JSW Steel over the weekend and the kind of reaction that the stock saw yesterday. Now, JSPL is no different, by the way. It's not a very great set of numbers that the companies come out with. So revenues up 35% at 14,339. That is also slightly below Bloomberg estimates. EBITDA 38% lower at 3070. The estimates were 3854. Net profit 2206. That is slightly better than the Bloomberg estimates, but EBITDA margins at 21.41 versus 25.86. That was the estimated number, and therefore that is a bit of a pickle. Now it is a straight top-down miss. The EBITDA per ton, as I read viewers, is the lowest since quarter 2 FY21. And that's not great. I mean, EBITDA per ton was down about 47% YOY and 27% QOQ. So certainly not the best of numbers by JSPL. and therefore this is one stock that people should keep in mind. Then the pharma names, Sun Pharmaceuticals, the Q4 FY22 numbers, revenues up 11% at 9447 crores versus 8523 crores. The estimates were 9576. EBITDA up 6% at 2179. The estimates were 2544. There is a net loss for this one, which is not great, at 2277 crores versus profits of 894 crores, and the Bloomberg estimated profit was 1707 crores. So that is a bit of a pickle for this one. You would argue that operationally, you could argue that the numbers were just marginally below estimates. In some people's estimates, they were largely in line. The loss was, of course, due to an impairment worth 3,935 crores because of an antitrust settlement in the US. But I would reckon that maybe Sun needed to pull a rabbit out of a hat in order to justify a bit of a rally that it has seen in the recent past. Somehow not quite able to live up. Revenue is okay, but operationally could have been a bit better. Similarly for Aurobindo Pharma, right? Revenues look okay, 5,809 crores versus estimates of 5,901 crores. So that is okay. But margins at 16.8 versus estimated 17.4. Net profit down 28% to 576 crores versus estimates of 600 crores. Not as big a miss as Sun Pharma, you could argue, but I think the numbers deserve to be slightly better. It's just slightly weak. It's not an expensive stock, so that goes into favor, right? TTMP 11-12 times. Always a hope of Aurobindo doing something in the near future, some deal in the offing which could help the stock. But for now, slightly weak set of numbers. Trident looked okay. And again, remember, yesterday or all through this earnings season, whenever a textile company, never mind the issues around what's happening to cotton and yarn and the problems that lie ahead, whenever companies come out with a good set of numbers, the market is duly rewarded it. Trident, I thought, was a good set of numbers, really. Revenues up 37%, EBITDA up 40%, margins expanding marginally, net profit up 130%. I don't think you could find too many faults with what Trident did. So I thought a decent set of numbers by Trident as well. Some people would say, I mean, well, maybe a bit of a reaction has already happened, but I just wanted to highlight these numbers today, even if they were spoken about yesterday, simply because it's just that's good a set of numbers. Now, CG Consumer, on that, the Nomura note was interesting, and therefore I bring that. They say that they lowered the target March 24th PE to 35 times to factor in higher cost of capital, therefore arriving at a target price of 464 versus 544 earlier. So they have, of course, lowered the target price, but the stock trades, according to them, at 29 times FY24 earnings as per their estimates, which they believe is attractive considering a healthy 16% CAGR and a likely strong ROE of 24%. They maintain the buy rating on the stock. CG Consumer, a couple of brokerages also came out with the numbers, so that's their notes. And all of them, while the target prices may have been lower or higher, they are higher than the current market price and therefore constructive. The other one that probably might be in focus, and this was I brought about M&M in trade yesterday as well, brought the Morgan Stanley note only in the trade setup yesterday. But I'm bringing it again because brokerages seem to have revised the target prices higher because M&M has embarked upon a bit of a capex spree. So Morgan Stanley's note again says overweight with the target price having been raised to 1198. They say that they've increased the tractor volume estimates, which drive the FY23 and 24 EPS upgrades. With the auto turnaround on track and group ROE improving, the core business at 13 times looks attractive according to them. Remember, M&M is also a bit of a mix of the other businesses, and the capital allocation strategy working well. The next focus is on accelerating growth. So M&M is in focus, and it's not just Morgan Stanley. Some of the others like Nomura has raised the target price to 1308. Systematics, they've hold with the target price of 881, but Motilal maintain a buy with the target price of 1150. So largely constructive, you would have to say. And if you go to see what also works in favor is what's happening to the group companies, right? So ICICI Securities coincidentally has put out a monthly quant pick on Tech Mahindra. They are saying that technology space has remained significantly negative in terms of price performance, and Tech Mahindra has further underperformed their peers. They believe that there is significant room for upside after a correction of almost 40% from the highs. The current OI in the stock is at 9-month highs, and they believe that some bit of short covering might happen. So having seen early sign of closure suggesting ongoing short covering, and the recent short covering move is likely to continue towards the 1280 and above levels for Tech Mahindra. So do watch out for this. Now, some other results which I haven't been able to figure out in detail, but which looked okay optically. So KNR Constructions was a decent set of numbers. I thought sales were up about 29% QOQ, EBITDA was up 100% QOQ. So watch out for KNR Constructions today. Watch out for Techno Electric, which the numbers looked okay. 43% YOY number uptick, gross profit up 30%, margin QOQ was down, gross profit margin, but still okay. EBITDA up 107%, margins 12.7% compared to 8.8% in Q4, and decent PAT number as well, 37 crores. That's nearly 190% jump YOY, as well as Rail Vikas Nigam, which I thought from the looks of it looked okay in terms of the numbers. So in terms of weak numbers, viewers, Jindal Steel and Power, in terms of certainly very weak, and the pharma names left a bit to be desired, Sun Pharma and Aurobindo. In terms of strong numbers, the likes of RVNL, Techno Electric, KNR Construction, just a revisit to Trident and a revisit to Mahindra and Mahindra as well. So therefore, that is the thing. And watch out for technology as a pocket that could be doing well. But keep in mind, viewers, amidst all of this and amidst the slight bit of tailwind that we've had 3 good days of a rally, and crude is hovering northwards of 120. So that's a bit of a pickle that everybody got to watch out for, as well as the Eurozone inflation data, the sound bites from the Joe Biden and the Jerome Powell meeting. So a lot more global than local in action for the next 24 to 48 hours. So keep that at the back of your mind. Thanks so much for tuning in today. If you're stepping out, do stay safe.